Hello and welcome to a brand new show of ET Interview. If there is one bank which has demonstrated three things very clearly in last couple of years, first is survival, then is revival, and the third is flourish. I guess that is IndusInd Bank. They've turned at a time when the circumstances and the lay of land were difficult. From IL&FS crisis to the COVID crisis, IndusInd Bank in a sense has managed to really rise at a time when that tough was going. And the man whom I would be interviewing today, in a sense, has really spearheaded this dramatic rate of change. He kept on working, he kept on under-committing, and now the bank is really delivering and firing full cylinders. So it gives me great pleasure now to bring on board Mr. Sumant Kathpalia of IndusInd Bank. Fantastic to have you. Thank you for joining us.
Thank you so much, and thank you for your kind words.
Every time I come to your office, I can see the bulls and the lovely paintings on the wall. So, bulls on the wall really are a mascot of how good you're feeling about the world and how good you're feeling about India.
Yes, I think, in a very difficult macro and the world macro, I think India, it continues to outshine, and I believe it's just started. I think the next decade belongs to India, and I'm completely convinced that whatever our regulators and the ministry is doing will only fuel the growth in the Indian economy.
Let's talk about specifics of IndusInd Bank. If I take the clock back, let's say 5-6 quarters ago, IndusInd Bank was growing in mid-teens. Now you're growing in early 20s, much higher than the industry average. You're growing without raising capital. Your CASA is in place. So can I say that now the bank is firing full cylinders?
I think you have to see our growth and where the growth is coming from. I think we have domain specializations. So our two domains actually got subdued during the COVID crisis, which is the vehicle finance as well as the microfinance. And we were very conservative on that. I think they've come back with a very strong vigilance. And over a period of time, we've also diversified that book. So we are not now dependent on one asset to give us the business. There are 8 categories of vehicles. For example, car loans is 25% of that portfolio now in the vehicle category. If you look at microfinance, they're not dependent on JLG. 15% of the book comes from merchant acquiring business. So we've started to diversifying that businesses so that the cyclicality of that business continues to go off. On the diamond side, we've seen a reduction because the diamond industry is in a stress. So we do working capital. The book has reduced by 10 to 12%, and we are fine with it. So I think as long as we are in the businesses which are seeing growth, I think we are seeing growth. We've added new boosters to our growth. Mortgage businesses have come in. Affordable housing has come in. I think our consumer bank business has started firing on all cylinders, growing at 35 to 40%. So we've got a very good momentum in place, and I believe the bank can grow at the rate of 18 to 23% on a compounding basis.
And you see this kind of visibility for 3 years or beyond 3 years?
So we always make a plan. We've made a plan for PC6, which is a 3-year plan. We believe that we should be growing at 18 to 23%. And in the first year, we're growing at 20-21%. So we are on the right side of the growth rather than on the left side of the growth.
And do you see you could remain on the right side of the growth for next couple of years? Because 18 to 25, sir, there is a delta of 5%.
18 to 23, you're absolutely right. And I think we believe that with the type of domains which we have and the investments which we've done in our business, our growth should be upward of 20% on a compounding basis.
Okay. Now, if one looks at the nature of your book and the current credit cycle, 60% of your current book could be called as cyclical in nature. Car loans, microfinance loans. The fact you're growing, is this largely because of the tailwind of cyclicality in the economy, and that could come under a check?
So you're wrong. 34% of our book comes from microfinance, and 37% of our book. Microfinance and vehicle finance.
Okay.
On the vehicle finance, if you go back 5 years from now, our dependency was on the MHCV segment. Today we do LCV, we do utility vehicles. So our dependency on the MHCV is reduced. We added car loans, which is another 20%. Then we added tractors, where we have a 10% market share now. So we added new areas of business so that the business is not dependent on one area, but is dependent on multiple categories of vehicles. And that is what has stood us in this time. And I believe you would have seen it over the 8 quarters now. My CFD business or the vehicle finance business continues to grow. I also agree with you on the microfinance business that it becomes cyclical during certain times, and that is why we've started diversifying that business. And I believe in 2 years' time, you'll see only 60% of the microfinance business coming from the JLG. 40% will get into diversified into house improvements, merchant acquiring business, scooter loans, two-wheeler loans. So it's not going to be only dependent on a small category of vehicle, which is the JLG business.
Your ratios are currently very favorable on the capital side, and it's about 16% plus. So if I add the maths here, 20% growth with the ratio, with the capital adequacy buffer, which means that 20% growth is coming without any capital raise. Will that be a fair assessment?
So we've done our calculation. We are at 18.3% on the overall capital and 16.3% on the CET1. If your internal accruals are what we are, and if your ROAs are between 1.9 to 2.2, in my opinion, you should be able to grow for the next 4 to 7 quarters without raising any capital as of now. And our risk-weighted assets, which were at 2.69, have come down to 2.59. So as long as you're balancing your risk-weighted assets, you're using your capital judiciously, I think you should be fine.
If I take the clock back, the turnaround moment for IL&FS and for IndusInd Bank, first the downturn happened because of IL&FS, then COVID happened. Then you were able to check your book and get the growth back. But the real growth has come back in last 4 to 5 quarters. So growth coming back is one trigger for IndusInd Bank. Now for next 3 years, which ratio would you be able to improve so that there is going to be visible change in your profitability?
So I think 3 areas where we think the cost of funds on the liability side, and you would see as and more we granularize our liabilities and we become more and more granular, I think our cost of deposits differential between the large banks and us will reduce, and that should give us a 20 to 30 basis points NIM expansion over a period of 2 years.
Irrespective of the interest rate cycle?
Yes,
okay.
Irrespective of the interest rate. Okay. Because we have a fixed rate book, yes, 60%. So we will see that advantage coming through to us. Number 2, I think our provisions and we've said that our cost of credit is 110 to 130 basis points. I believe at some point it will settle at 90 to 110 basis points for us. And I think that is where this bank will settle down. Even if you will see that coming from the 4th quarter, our cost will be 100, but I'll add 20 basis points to the contingent provisions. So I think that advantage of the cost of credit you'll start seeing in our balance sheet as we move forward. So that's number 2. Number 3, I think in a declining interest rate scenario, and I think the accommodative stance sooner or later in 4 to 6 quarters will start coming in. And once it starts coming in, our book is very different. So if you look at it, we are naturally hedged, but 58% of our book is fixed rate and 42% is floating rate. And you will start seeing the advantage of a fixed rate book with the declining interest rate, and you will see NIM's expansion as a consequence of that. So one is the interest rate, the other is the book itself will start giving you the expansion. So I think our NIM over a period of 2 years should settle down between 4.3 to 4.5, which we're saying 4.1 to 4.3, should move by 20-25 basis points. I think our credit costs become at least 20 basis points down from where we are. And in my opinion, that will give the bank a 2% steady, 2 to 2.2% steady ROA as we go. And that will be a very granular, very well diversified business as we move along.
2% ROA is something which is actually enviable even for rest of the banks. So I'm just going to hit the pause button here and summarize it for our viewers, and maybe we're getting this entire framework from you. I will not use the word guidance, but I will use the word indication. The indication from IndusInd Bank is the following: that credit growth will sustain in and around 20%. You are looking at credit cost coming down and it's coming down significantly in and around 1%, and ROA is moving above 2%.
Yes.
If these three factors come together, then FY25 and FY26, according to our estimates, are going to be bumper years for you.
Yes.
Is that a fair assessment?
You're absolutely right. In
definition
my
of
opinion, don't rule out 24-25 also.
You've consciously stayed a bank. If I look at some of your peers, the top 5 banks, they are now platforms. From insurance to mutual fund, from just about anything which will generate more fee-based income for them, they are present there. Have you consciously shied away? You did bid for example, the Citibank credit card, but you did not find the value at which your peers were bidding. So bottom line is, IndusInd Bank is perhaps the only large bank in India of its size, which is very unique and which is only focusing on banking. That's a good and a bad reputation to have.
So I tell you, you have to see at what time you want to do what. Unfortunately, we had a plan to get into parabanking and all these activities in 2018. But somehow these circumstances and the environment changed against us. And at that point, to go to the regulator and ask for an approval would not have been very nice, because you've got to bring stability in business, and that's your main line of business before you start doing any of these things. And I wanted to bring stability of our funding franchise and our asset franchise, give the comfort on our governance processes to the regulator before I said that let's step out and start doing things. As we do this, I'm still interested in a parabanking activities. I believe an AMC business and a brokerage business complements the wealth management business which we want to do. So we will continuously evaluate, and we think we are at an opportunist time right now, because I think savings will move into capital markets as and when we go. That banks should invest in these type of businesses, and we will find the right time. And I think in the next 2 years you should start seeing us evaluating and proceeding in that direction.
There are 40 AMCs in India. Brokerage rates are coming down. Are these the good sectors you really want to get in, because competition is brutal?
It doesn't matter. You have to look at organic and inorganic ways to do this business. I think you have to decide what type of business model which you will create and what segments which you will enter into this business. In our opinion, you have to see how you mix and match both these events. So while you have to be a leader in the assets in which you do, where you have a right to win, you should play in assets where you have a right to win. In return ratios, you should always be in the top quartile of the business.
Markets are curious to know that when would the Hinduja family be increasing their stake in IndusInd Bank? Most of the necessary regulatory approvals are in place, and they've come, I think, 6 months ago. We've not heard from anything beyond that.
So I can't comment on that. There's an internal process of capital raising and the IPO happening in the promoter company, which is our IHR. When does that happen and how does it proceed? I think will happen. Having said that, since we are very well capitalized, we don't need the capital right now. Even if they get the approval for the 26% stake, I think it will depend on the bank when it wants to raise the capital. I would always want that if they get the approval, they should bring in the primary capital into the bank, because it makes the fortification of the balance sheet much better. I will always want that.
You don't need capital, and shareholders, they want Hinduja holding or promoter family, family holding to go higher. The only way out I could think of primary capital, or I could think of open market transaction, or they could increase their stake by the open market. So can that also be considered?
In my opinion, I think a very small portion they should consider, but I think more and more a promoter who has a long-term interest should always fortify the balance sheet. And I think there will be many opportunities. If I said that there is a fourth domain which is going to come in, or a para-banking activity, that is an appropriate time for them to say, is there an inorganic route or an organic? And that is when the capital requirements come in. Not on the BAU business. I think we are very well served on the BAU business. Just increasing the capital is not going to help the bank.
It's going to bring the return ratios unnecessarily down only.
It doesn't make sense for them to bring the capital now.
Okay. So let's look at scenario number 2. Scenario number 1, you've shared with us the credit growth the return ratios. Scenario number 2 is that the bank receives capital from the promoters. Now, if the capital comes in, the fourth scenario which you talk about, the acquisition route opens. What happens in scenario number 2? Let's say next 6 months or next 1 year, the capital comes in from the promoters. Then what happens in scenario number 2? Because that's a realistic scenario. We are talking about scenario number 1, which is on the table. But there is another possibility of scenario number 2, which could happen. So in scenario number 2, what happens to the progress and the curve of the bank's growth?
See, if we get into scenario number 2, I think para-banking will come in, and I think the bank becomes a conglomerate rather than a banking business, which is what you taught. And I think that's a very important vector for a bank. Take 2 years, 3 years, but it becomes that. I've always said that domain specializations is where we focused, and what differentiates this bank as a USP from other banks is that we are a large bank in the domain specializations. We will continue to look for a fourth domain specialization, which means that more than 10% market share in the business in which we want to go, and it complements our existing business. So we will always evaluate such businesses, and at appropriate time we will see whether we can get that business.
Your new digital business, Indie app, and I can see the brand visibility because all of us watch cricket and we can see the brand visibility. So perfect and a fantastic platform to launch that. Having said that, every bank is claiming that, look, we have a digital edge. What is the digital edge which you genuinely have from others?
So Nikunj, there are 3 ways to look at it. The initial phase was go ahead and enable the banks towards digitization and open an account. And then your app does whatever servicing of the app. That to me is primitive. And a lot of banks are still doing that. So digital as a business is a very different concept, where your competitors are not the banks, but the Jupiters or the neobanks, but with the trust of a bank.
Okay.
And if you are able to bring a complete differentiated client orientation and offer a comprehensive suite of products, basis not what the branch offers, but basis a very differentiated client experience. Let me give you an example. So for example, you open an account in a bank, then you apply for a personal loan, there will be a cross-sell. We don't do that. We open a line, a client can come in, he decides where the client wants to come in. Immediately, basis the profiling of the client, he gets a line of credit. The term loan is not 12, 24, 36, 48. The client can decide multiple drawdowns on the term loans whenever he or she wants it. Can decide what the tenor and how they want to pay.
Even in number of days.
Number of days. They can decide.
10 साल 15 साल वाला वो tenure.
कुछ नहीं है. They will decide. Exactly, we will do the same in scooter loan. Exactly in car loans. Exactly in home loans are very differentiated, and exactly in cars. Now look at co-brands as a card. Co-brands are dead in my opinion. Customers should have a choice to say he makes a own co-brand every week. My Indie app will allow the client to create a co-brand every week and decide, I want to spend on this, I want to earn on this and burn on this. That is the power of personalization. It's a personal, hyper-personalization where I don't restrict you with my products. You decide I give you the capability to decide your products, and you do what is best.
So this is IndusInd Bank truly adopting AI.
Yeah?
This is the way real adaptation of AI for you.
Absolutely. And it's AI engine driven. It is complete personalization. If this succeeds, I think it's a very differentiated way of banking. And then the next phase is IndusInd for NRIs, Indie for NRIs. Completely different capability on NRI. Indie for MSMEs, which is coming. Complete. We are changing the way an MSME has been thought through, and NRI business has been thought through. And if we can bring that, and you have to understand what are the trouble points. If you can resolve that through the app, you've got the solution.
Since we are in that cricket mood right now, तो अब cricket की बात करते हैं. So, if you have to divide the bank in 3 cricket frameworks, formats, T20, one-day and test match, which end of the banking business right now could see a T20 evolution, quick and fast? Where do you think the steady test match strategy has been adopted, and where do you think one day, which is the fever right now, is at play?
So let me tell you, I think it's a mix of all.
Okay.
You know, you can't play a bank in a T20 one day or a test match format. I think since we have a fiduciary responsibility, we always have to take a balanced approach towards the growth. But if you ask me this question, I think our businesses in vehicle finance as well as in the consumer side now are growing at a faster pace, and they are absolutely in a growth phase right now.
Okay. So T20 bolte hain.
Yeah, T20. I don't. But I think the digital now. Okay. We've just launched it. We've got 400,000 accounts in 1 month. So we have to see how it plays out and what is the value accretion of those accounts which happen. But that's a business where it gets us into a major player in the urban market to a large extent. And we want to create a huge market share in the urban market share. So I think that's also a game which we've started. And I think the MSME and the SME, I think we have a right to win in the SME and the MSME space. And I think innovative offerings which we are bringing in, we should see a very differentiated pace. The test match approach is the affluent business where I think I need to add the para banking activities. So while we've got 70,000 crores of NRV, but I think to come in the big league, we still need that help of the para banking activities to support that business.
So couple of last questions. All of us breathed a sigh of relief when you got your extension. Magar ab board will have to apply again if they want your extension. What are the thoughts? What do you think is going to happen in terms of where the chain of command in IndusInd Bank would move?
So I think the board has to decide whether they find me fit and proper to apply for an extension.
But they'll have to apply in next 6 months.
By June next year. So I think that's a process which will go on. But I think we have to wait for that time and place to come. And I think if I've done everything right, I do see no reason for the board not to give me an extension for the next 3 years. And I think so we have to wait for that appropriate moment. So the board is the determinant. But otherwise, having said that, the bank will always have succession planning in place. Bank cannot run on one individual. There's always a succession planning in place, and there are always identified individuals who can take over from me at any point of time in case there is something which happens to the bank. So the continuity of the bank can never be questioned.
No, you manage the turning economy pitch very well. The swings of COVID and the volatility of interest rates, I think you've really, steered the ship remarkably well.
Just do the right things and worry about the client. I think you'll always get the right answer. The results will take some time. I've taken some time. Yeah. But at the end, when the results come in, they are more sustainable and much more granular.
And I like to endorse this because there was a time I used to ask, the management of IndusInd Bank that on a balance sheet size, which is lower than HDFC Bank, why are you growing at a rate which is lower than HDFC Bank? And now they've really come back. Last 3-4 quarters, you managed to hit out of the park. Yeah. But sir, last question, everything has a risk. It could be no ball, it could be a googly. So what is that risk for you? Is it the economy per se? Is it interest rate? It is what is happening to the rural economy? The rural economy numbers are not adding up, and retail book is still growing. So what is the risk?
So you take market risk, you take operating risk, and you take the credit risk into account.
Market risk, credit risk, yes, you'll have to take both.
And of course the political risk, the geopolitical. As a bank, you have to continuously do stress testing of your portfolio. And you must over-provide and fortify your balance sheets to do that. That is why I've always believed showing results is not important. Fortification of balance sheet is more important. Continuously provide in the contingent provision and continuously make sure that portfolios which are cyclical to some nature, you have provided for them, that in bad times you're able to take out of it, in good times so that your earnings are stable rather than they're volatile. I don't like unstable earnings. So if you look at our NIMs, you look at our credit cost, you look at our PPO, very stable.
So there was a time when IndusInd Bank used to trade at price to book of 4. There was a different era. Do you think the era could come back?
I don't comment on market speculation. I think my job is to continue to produce EPS and the earnings. I think let the market decide what it feels is good for us.
So market price is always a function of EPS and P. P is a function of perception. Perception is a function of consistency. Perception is a function of predictability. And perception is a function of quality of earnings. And I can say that if I add all three up, in effort 2 and 2 together, I guess the re-rating I think should always be around the corner, looking at how the market dynamics are moving. तो अब रैप करते हैं, मेरे साथ बोलिएगा. जीतेगा भाई जीतेगा. इंडिया जीतेगा. जीतेगा भाई जीतेगा.
हिंदुस्तान जीतेगा.
इसी स्पिरिट के साथ let's go back to the studio. IndusInd Bank, and you've just got all the ingredients which are in the melting pot, like I said, consistency, predictability, and also a very stable outlook in terms of growth. So एक और बात करते हैं, जीतेगा भाई जीतेगा.
इंडिया जीतेगा.